Hello again, everyone. Welcome back. In this technical analysis of the stock market video, we're going to take a look at the Dow Industrials and the Russell 2000 today, check in on a couple of indicators, and then take a look at the three ETFs, the S&P 500 sector ETFs that have performed the best so far in the first 3 weeks of the year. Okay, the Dow Industrials were up 271 points this last week, closing above the high of the previous week. And yes, sitting at a new all-time high. The S&P 500 sitting at a new all-time high, up 56 points. We're going to talk about this in a minute. And then the NASDAQ 100 also continued to push higher and sitting at a new all-time high, up 481 points. So pretty strong move. The Magnificent Seven and, technology, semiconductors, have had a very strong influence into these two indices. But let's look at where the S&P 500 is sitting. New all-time high. That's where these dashed lines are. They're back to where the prior all-time highs were. And let's take a look at what the Russell 2000 is doing. Here's the all-time high in the Russell 2000, November 21. And here's where we sit today. This is a weekly chart. So not even close. Not even in the same ball game. And it's interesting, I came across this tweet, I still call them tweets, that Jason put out, and he said, we're at an new all-time high. The Russell 2000 is still in a bear market. That's never happened before. So there's something a little strange going on. Some weird dynamics are going on in this market. The real question is, for how much longer is that going to happen? All right, so we're on the Russell. Let's just go ahead and take a look at it and the Elliott Wave picture that I've got. So here's the weekly, here's the daily. It was up $1.83 on Friday, Thursday, Friday, little bounce, and down 80 cents on the week. Okay, but let's take a look at the Elliott Wave picture. So I'm still looking at this from an A, B, C zigzag pattern on the Russell, and that this B wave is a big sideways combined double zigzag in here, WXY, and that we've started working our way down on the C wave, primary wave C, little red circle, primary wave right here. So here's the daily view, and where it really jumps out a little bit more is when I drill down, take a look at the 130-minute view. Okay. 130 minutes is 3 bars to the day. So in my view, we've had first move down, a flat for wave 2, and we're working our way down in wave 3. Okay. And within that wave 3, it looks to me like we've had a first wave 1 and a second wave pullback. If that's the case, we should very soon, probably Monday or Tuesday, be rolling over and heading back south. We'll see what happens. That's the expectation if this wave count is playing out. Okay, so that is the Russell 2000, and as we know, as we just talked about, it has been the weakest of all the indices. Let's take a look at the industrials. Okay, the Dow Industrials were up 271 points, as I just talked about, for the week, but on Friday they were up 395 points. And that Friday's price action basically salvaged the week, okay? And yes, we pushed above the prior highs in here and actually closed above those prior highs. So any wave count that we had as possibly rolling over, had a little bit of a moving average cross in here, basically went out the window because, the market has said, no, I'm not done going down just yet. Okay, so here's the wave count we've got on this. I've got this as a large flat that's underway, A, B, and within that A, B, here's the zigzag. And now we're looking at this C wave to finish playing out. And it needs to be 5 waves. So here's what I'm seeing when you have a C wave of a zigzag like this. This is the way I've got the wave count. Now, we had a fairly abbreviated wave 2. Even more so abbreviated corrections within this strong third wave. Then we had this sideways wave 4, and it now looks, and you can see the correction on the RSI in here. it looks to me like we're heading off here in wave 5. So a couple of things about projections out into the future. When you look at B versus A, okay, here's where B equals A, back to the beginning of wave A. Let's just focus on wave A for now. So when I look at how far a wave B can stretch in a flat, okay, the first targets I get are 127.2% and 138.2%. So these are the targets I would have if we continue to push higher in here. Now, the second thing I would look at and line that up with that is to say, well, within this last C wave, what about this fifth wave, the fifth minor wave? Well, where does 5 equal 1? Well, that's kind of the first, little target. Let me take it off a semi-log for a moment and see how that looks. Yeah, there we go. Here's a couple of targets. So notice how wave 5 equals wave 1 right in here at 39,048. Okay, so again, the fifth wave needs to have 5 waves to it. It could be an ending diagonal, it could be an impulse. But here's a couple targets that are kind of clustering right in here. So we'll see how that plays out. So that's what we've got on the Dow Industrials. We talked about the Russell 2000. Okay, the next thing I want to look at is a couple of indicators. Let's pull up the VIX. So on Friday, the VIX was down 83 cents, back down below the 10-day moving average. Disappointing price action for the bears. But right now, this is just confirming the way, the indices are pushing higher and the VIX is just collapsing back down after 3 days of being above the 10-day moving average. It just can't seem to get ahead of steam. When we take a look at the high lows on the New York Stock Exchange, we're back above zero after dipping down below zero. Okay, so we're sitting at 63 more stocks hit 52-week highs than lows on Friday. This is a net, highs minus lows. So you could see what happened over the last year. Here was February 2nd, Groundhog Day of last year. We had the whole banking crisis issue with SVB and, back in March. At the low, we rally up into July. And notice how this really didn't kind of confirm that last push in July into early August. And we collapsed down into October, November. And then here we go with the surge into December. And here's where we are now in terms of kind of, stair-stepping our way down just a little bit. We'll see where we go from here. We're going to create some major divergence as the market continues to push higher. I just don't think, when I look at the industrials and look at the S&P and look at the Qs, just don't think they're done pushing just yet. But again, I've pretty much got both of those, the SPY and the Qs, in the same bucket as the industrials in terms of being in a B wave. I'll talk about those on another weekend. All right, let's take a look at these S&P sectors that move the biggest moves of the year so far. Okay, no surprise here with XLK. It was up $4.51 on Friday. Okay, so this is the daily view. Tell you what, let's look at the weekly view. Okay, up $7.93. The last 2 weeks, after taking a dip down that first week, pretty good moves the last 2 weeks. Now, it's up exactly 4.0% on the year. So after the first 3 weeks, it's up 4.0%. That's in first place. Second place is XLC. Again, heavily influenced by, some of these Magnificent Seven. And by the way, 6 out of the 7 Magnificent Seven were higher this last week. This was up $1.02 this last week. So, not even close to the all-time highs of August of 21, but it's definitely trending higher. I mean, we haven't gotten a breakdown of any kind yet. I mean, we started to get a little bit back in October, but it continued the move to the upside. And then when the third place goes to XLV. healthcare. Pretty good little breakout of this trend line. Okay, this happened the week of December 10th. Yeah, if I'm reading that right. Yeah, the week of December 10th. We broke up through it, pulled back, and then continued that with the following week. So now this has been, what, 2, 4, 5 weeks in a row. Now this was down $1.06 the last week, but it is still up 2.26% on the year. So kind of interesting. Everybody was talking about it. Of course, it was all over CNBC. You know, all they could do is talk about healthcare and the healthcare stocks the first week, and then not so much this last week because of semiconductors and technology. So we'll see what kind of continuation we get out of this. Notice how the high the prior week, we're up there, you know, kind of tagging some of these prior highs in here of December of 22, 141.77, and April of 22, 143. So 141 to 143 up in here, and the high right here was 141.56. So we're getting up into this zone. I really need to draw some lines across the top in here because this could form an interesting little like resistance zone. And, you know, if it closes above that zone, which of course, if it closes above this high, then, you know, that would be pretty strong impetus that it's going to continue pushing. So we'll see what happens. Okay, that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the YouTube channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website and the membership. Everyone have a great week. We'll talk to you on the next video.